global economic outlook continues to be bleak. Financial conditions are tightening and recession fears are mounting. Inflation continues to persist at alarmingly high levels across jurisdictions. Now we are in the midst of a third major shock, a storm, arising from aggressive monetary policy actions and even more aggressive communication. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. Without venturing into any forward guidance which can be hazardous in the present context, I would like to state that our actions will be carefully calibrated to the incoming data and the evolving scenario.
It was an entirely predictable 50 basis rate hike from the Reserve Banks. Normally, a 50 basis hike would have raised heckles in the market and in political circles. But stock markets actually cheered with a near 2% rally, especially for the Nifty Bank. So shocking has been the currency market and the global turmoil that anything less than 50 may have actually been a risk both for markets and for the economy. But now the question is, what next? The governor absolutely and resolutely refused to give any guidance, as you just heard from him. So how many more rate hikes? Are we anywhere close to the peak? Also, are the GDP forecasts of 7% slightly lowered and the CPI forecast of 6.7% for the full year, 5.8 by end of the year, all of them, are they realistic? More importantly, what is the impact on the real economy? For all these questions, I have an elite panel with me. I have with me no less the chairman of the State Bank of India, Mr. Dinesh Khara. Also with me, Mr. B. Prasanna, Head of Global Markets Group at ICICI Bank, Samiran Chakraborty, Chief Economist for India at Citi, and Mridul Sagar, former member of the MPC and a Reserve Bank ED, now an economist with the NCAER. Gentlemen, thank you very much. I could not have asked for more informed people to guide us about the future of the policy and its impact. Mr. Khara, straight away to you, and thank you very much for joining all the way from London. So what is the sense you are getting? This is 0.5% is quite a bit, and most of the loans are being taken by retail credit in your own bank, more so for other banks. Do you think at this level we might see a slowing of the pace of loan growth?
Well, Lata, of course, the first reaction could be what you just mentioned. The pace of the loan growth might slow down. But I would like to go a little deeper and would like to draw your attention to the fact that we have already seen about 140 basis point increase in the repo rate for in the current year itself. And we have actually seen that the growth as far as the banking loan book from the banks are concerned, it is witnessing a very healthy growth, almost as high as about 16% plus. So I think what you mentioned in terms of 50 basis point, perhaps it was almost factored in by all the participants of the market. And ever since the 75 basis point hike was announced by the Fed, we were all expecting that it is going to be 50 basis point. So to that extent, it was not a shock in terms of expectation. But yes, of course, your second question relating to will it have an impact on the borrowing from the
small guy,
from banking system. Yeah, I think it will not have a very significant impact. I just did some bit of a back of envelope calculation in terms of EMI and its impact, and could figure out that overall the EMI impact on the EMI is somewhere. It is somewhere between 3 to 4% of the EMI amount.
Okay.
So I think, to my mind, it should not be a dampener, because so long as the demand is strong in the market, and all of us have seen that last about 2 quarters onwards, we are seeing a very healthy demand trends.
Okay.
So I think, though momentarily it might impact, but eventually the decisions taken when people come for the borrowing are generally having a long-term perspective in mind.
Okay.
And we're all aware that, this kind of though Honorable Governor has also indicated that the growth is going to be little slow, but I would say that it is still better than many other countries across the globe, and it is still a very healthy growth trend which is expected to really emerge.
Okay.
And India continues to be the shining star.
Oh, yes.
And perhaps we will not witness the kind of slowness.
Okay.
Though there's small dampening effect which is seen in terms of the new projects.
Okay.
But I think even that also people might reconcile with the situation and will come back, because the project lending is invariable for a long term, and over the long term period, all this gets averaged
Okay.
out.
So I will come back to you.
think so
I will come back to you on capex cycle, sir. But
Yeah.
I wanted to ask you just one more thing. The governor was not very perturbed by when we repeatedly asked him about deficit liquidity in the banking system. Therefore, it looks like they're not going to give any extra money in terms of more VRRs, variable rate repos. I'll go to Prasanna also on this. But right until now, every rate hike was absolutely a Diwali for you and Prasanna's bank, because it meant that your lending rates just went up. Deposit rates didn't go up. You think that golden period for banks is over. Now you will be forced to raise deposit rates in tandem with lending rates.
Lata, in the past also, of course, the policy rates were, of course, a big indicator. It was more like a bellwether indicator. But nevertheless, banks like us are always dependent upon the deposits for supporting the lending book. So I think that will continue to be the trajectory, and much of it will depend upon our own ALM positions. And each of the bank will probably revisit the ALM positions and will decide in terms of increase in deposit rate, etc. That I think will be the decision which will be taken by ALCO based upon various variables which are studied at the time of such decisions.
Okay. No, I just want to know if now this growing spreads, which banks were benefiting from, Prasanna, do you think now it has to be evened out? Now deposit rates are definitely going to rise at least as much as lending rates, no? On an average.
So, Lata, I can give my views. I will give it as a market analyst and talk about the general banking system, Lata. So it's nothing to do about
general, not
my
ICICI.
specific bank.
Yeah.
So I think I would also tend to agree with what Mr. Kara was saying. You have to remember one thing, Lata. I think what has happened so far is that the increase in repo has translated to a large extent to the increase in the wholesale deposit rates, commercial the CD issuances by banks, and so on and so forth. But what has not really impacted so far is the retail deposit rates, like you rightly pointed out. But also bear in mind that the retail deposit rates for the banking system overall would be only around, say, 40% of the overall cost of funding profile of the banking system. So even if, for example, a 100 basis point increase were to happen in the retail deposit rates, even if, then since the deposit mix is to talk about, the increase in rates is going to be to the extent of 40-45 basis points on the overall cost of funds.
Okay.
Because bear in mind that the CASA rates don't change broadly, and also bear in mind that the wholesale deposit rates and the CDs have actually changed already. So to some extent, it's the catching up of the retail deposit rates with the change in the rest of the interbank products, so to speak. But it is not really a one-on-one comparison that you can do with the deposit rates and the lending rates because of the funding mix of the various banks.
Okay. Fair enough. What you're saying is that there might still be spread advantages, margin advantages for banks like yours. I just wanted to give you both the information that ICICI Bank has risen 64% from pre-COVID levels. SBI stock has risen 71% from pre-COVID levels. So, much of it is, of course, for other reasons in terms of a clean balance sheet. But this increase in spread has clearly helped in the current year. I'll come back to you all in just a minute. The more pressing problem is how many more hikes. Now, on that, Mridul Sagar, your views. Do you think we have to go sizably into real rates from here on, since growth is not that badly off? So where would you place the real rate peak?
So, Lata, I would say there's still some catch-up to do for the RBI. So some more rate hikes are possible and should be undertaken. I mean, the terminal rate, as I had put up way back in June, should be round about 6.5 or so. I had mentioned that RBI would become data dependent once the rates cross at 6%, the policy rates. So it's very much evolving around that line. And the problem is that the real deposit rates still haven't gone into positive territory. So I think from the banker's point of view, I think it is important that deposit rates have to go up from here. We should get out of the financial repression regime where deposit rates are still negative. And that will bring about the right balance also in the sense that even with some lower NIMs, from the economy point of view, I think it is very important that those rates rise from here.
Okay.
And this will bring down some imbalances which might creep in on the external sector.
Okay, actually, Mridul, the question I really wanted to ask you is, how do central bankers think? I mean, it's possible that the Fed, going by the dot chart, is going to go on raising rates even up until March. That seems to be the peaking off date. Is it possible for an emerging market central bank not to hike rates at all when the Fed is hiking?
No, it's not possible. I mean, you do need to give some weight to it. While you have to acknowledge that basically the rate hikes would essentially be determined on domestic factors, you can't be oblivious to the interest rate caps because they also feed into domestic conditions in many ways. So I would say ultimately it will depend on how inflation and growth evolves in India. So I see growth having a downside risk from where the RBI projections exist, but not very significant downside to it. I mean, if it comes below 7% this year, it would be a matter of 0.2 or 0.3 in terms of percentage points.
Yes.
But into the next year, I see growth probably slowing down further from there.
Okay.
Also because of global factors.
Okay, I am going to come back to you for more on growth, but that is significant. Samiran, your reaction, actually I was going to come to you with that as well. Are you confident of Reserve Bank's 5.8% in the fourth quarter? And as well, do you agree that rates have much more to move, 60 basis more, as Mridul Sagar is saying?
So, Lata, today we have learned two things from the RBI statement. One thing is that RBI is quite closely watching the global central bank tightening and the negative spillover effect of that in India. And the second thing that RBI has quite clearly mentioned is that the policy is still accommodative and not reached the neutral point by defining that stance in terms of real rates rather than just in terms of nominal rates. Now, both these things will point towards more rate hikes in the horizon. We think 6.5 is quite a possibility. If it is done in 2 stages, then that will be in December and February. And if our view is correct that Fed is also stopping somewhere around March, then maybe that will coincide with more or less when Fed is also pivoting. But the bigger question actually is that whether the policy rates can stay at that peak rate for a prolonged period, or would we see a more quicker hike and cut cycle this time around? And our sense is that we will not be surprised if second half of 2023 we start seeing a rate easing also happening, because at this moment it appears to us that the growth forecasts of RBI are a bit too optimistic, at least for next year, whereas the inflation forecast for this year is quite realistic. But for next year, there is a possibility that RBI can follow what in economist parlance we call opportunistic disinflation, where when inflation comes around below the target range, then the RBI can promote growth a little bit more than what they are doing on the inflation front.
Oh, that's important. So they can cut even before it goes to 4. Even if it goes to 5, RBI can start cutting. Now, this may sound like jubilation to those to viewers who are listening, but the subtext of that is growth needs help. RBI's 6.5% forecast for next year seems under threat, is what Samiran is telling us. We'll scratch that point a little more with our bankers in a minute after this break.